Thanks for joining this session. My name is Jeroen. I'm one of the investors from Speedinvest, and we're actually very happy to be one of the co-organizers of this event. For this session, I'm joined on stage by Anna Alex and Mathias Ockenfels. Before I start to introduce them, I would love to kind of a little bit the idea behind this session. So obviously the title is No BS, a brutally honest conversation between founders and the idea behind it is actually quite simple. I think you will probably see a lot of super interesting topics on how to make your company successful. But what we actually want to do in this session is kind of like double click on the relationship between founders on the one hand and investors on the other hand. And ultimately, when a VC invests in your company, we're all sitting at the same table, but obviously we're wearing very different hats and look at the business from a different perspective. So what we want to do is kind of like magnify these different roles and viewpoints that we have. And the way we want to do it is actually in a very childish way, I would say. I pose a slightly controversial statement, and I will ask Anna and Mathias to kind of chime in from the entrepreneurial perspective and the investor perspective. Quick introductions for both of them. Anna is basically the Chief Customer Officer of Planetly. We're very happy at Speedinvest to be a co-investor in this company. It is a climate tech company, and it basically enables businesses to quite simply analyze, reduce, and compensate their CO2 emissions. Prior to that, she successfully built up Outfittery, very well-known brand, personal shopping service focused on men. And I think she had like a great path on building this company, raised more than $60 million in funding, went through numerous, so an extremely well-recognized in the European tech scene. The other one on stage is Mathias Ockenfels. He's my colleague and partner at Speedinvest. I think it's fair to say that Mathias kind of like lives in dream marketplaces. He has been investing for more than a decade in marketplaces, ranging from the very early stage, what we are doing here at Speedinvest when we invest in pre-seed and seed type of companies, to the very late stages of strategic M&A. If you want to ask any of them a question, feel free to use the chat, and basically at the end of the session, if time allows, we will try to address those as well. So let's kick it off. I think both Mathias and Anna have their cards ready.
We're ready.
And I'll start with very good. I'll start with the first statement. So something that we hear in the market is kind of this very romantic notion of how a startup founder and a VC collaborate, where essentially they say that this relationship is sort of a marriage. So my first question is, do you agree with that statement? And I'll kind of make a countdown just so we have it on the right timing. So 3, 2, 1, go. I see a no on Anna, and I see yes. Yeah. Maybe to start with you, Anna. Could you maybe give a bit of your?
Of course I can.
I'm heartbroken now. Yeah.
So for me, it's a completely different thing than a marriage. It is a business relationship, and from a marriage or from my husband or wife, I expect something completely different. I expect like eternal loyalty in that sense. What I do not expect from my investors. But so I actually see the founder-investor relationship much more than as a business relationship with like clear terms, what you agree on and what you can expect from the one side and the other side. And I guess this is as well good because there's something positive about this as well, because like on investors, you actually can do reference calls, which you can't do as well on husbands or future husbands or wives. So I think this is something what every founder should do as well. So
I think you should try that in a romantic relationship and do some reference calls actually. So I voted yes. And basically the reason is that Anna has the advantage of being married already. So she really knows what marriage means. I'm not yet married. I'm engaged. So I'm hopefully getting married soon if COVID allows for it. But I'm not yet married, so I don't know how it is. But I think a founder and investor relationship can actually last as long or even longer than some marriages. So I think it's it's important to approach it the same way and actually try to be as kind of trustful and have as deep relationship as maybe a marriage should be. And yes, I agree that it's obviously much less emotional, should be less emotional than a romantic relationship, as it's a business relationship. But that's why I voted yes.
I had a short technical hiccup, but maybe just as a quick follow-up question for you, Matthias. If you see it kind of like as a marriage, to what extent do you already feel kind of like cheated from the get-go? And the reason that I'm asking is essentially because when you are in the process of trying to raise money for your company as a founder, you obviously paint a very rosy picture, like everything is super shiny. And then typically you have at one point the first board meeting and stuff suddenly doesn't look as shiny anymore, right? So
yeah.
So how does that kind of like impact the relationship in the early stages?
I think it's just like dating, you're also doing the best thing you can when you meet for the first time and kind of portray yourself in the best way possible. Mm-hmm. So I don't necessarily think there's so much difference, but of course there's always this kind of moment of truth a little bit where maybe you realize that not everything looks like you thought it would look like maybe, but I think having made, I don't know, dozens of investments throughout my career, you also factor that in.
Right. And maybe for Anna, is that sort of like that difference of information gap basically between the VC and the investor? Is that something that you want to address like very early on in the relationship, or how do you think about that?
Yes, so I actually do think there should be a very, very open and honest conversation. And optimally, this conversation or this mutual trust is built already through the fundraising and pitching process, but then latest in the first board meetings or then in the following board meetings. Yes, so I absolutely do believe that this is very, very important to do this, although it's not always lived like this from both sides, because I guess oftentimes investors are kind of discounting what the founders are telling because they expect them to be pitching all the time. So if you think this further, you're in kind of like game theoretical problem, because when as a founder you're just brutally honest with your investors and talk openly about all the things that do not work, but the investors still assume that you're still in pitching mode or still selling yourself, and are discounting what you say. So then it might really be like even worse than it is in reality. So I think what makes sense, and then to really agree maybe as well on a mutual understanding of what openness and trust means and how you want to collaborate with your investor.
Yeah. Right. Cool.
Kind of a contract that you're talking about.
Thank you. Let's move on to the second statement, and kind of like this statement revolves around what I would call the holy grail in the world of startups and venture capital, which is namely basically having your fundraising rounds announced on TechCrunch. So my statement here is the closing of a financing round something you would consider as a measure of success of a company? And again, 3, 2, 1, go. Anna, your one says on, actually.
Oh, no.
So you have to switch it around. All right, maybe Matthias, you said a very clear kind of yes, actually. So what's your?
Yeah, I mean, we can only say yes or no. So I'm a little bit in the middle in that sense, but also having witnessed a lot of financing rounds and things that can go wrong, basically, I think it's still an important milestone and something that can be celebrated. It's obviously not, it's only the means to an end. It's not the final goal, but I think it's an important milestone, and it's a it's also a sign of external validation that what you are doing is appreciated by investors, by the broader community, by people, and that you are somewhat on the right track. So I think from that point of view, I would definitely say yes, but obviously keeping in mind that it's a means to an end at the end of the day.
Right. So how would you comment on that, Anna?
So I would definitely be a no here, because I mean, of course, it's nice as a founder to have some money in the bank from the investors, but it actually tells you nothing about your product market fit. And it tells you nothing about like how happy your customers are with your product, and so how good you will perform in the future. And I definitely see this super critical, that it is treated like the holy grail of all industries. So yes, I did a financing round. I'm a successful entrepreneur. I think these are two very different pair of shoes, and should be treated like that.
Nice. Just to challenge that a little bit, and obviously I'm here talking kind of like from the investor perspective, right? I guess there are like some cases, and I think a good example is the scooter industry, where we have like Lime and Tier and Bird all acting, where you could actually argue that kind of like having access to capital is part of the playbook, and is also kind of like a competitive advantage, right? So this actually seems to stress that fundraising for these kind of companies actually is actually a very important milestone.
Yeah, I think it's super interesting, maybe to chime in here, sorry, but because I attended Roger's talk just before ours, and I think he actually was talking about that, on how these times are basically also changing, and I think it's much more valued also from the investor side, that I don't know, you build a profitable and healthy and sustainable business, rather than kind of always just hunting for the next financing round. And I think he gave some good examples on that, or definitely worth rewatching afterwards.
Yeah, I mean, I definitely guess, of course, money can be used for the right things, and then it can help you build a great product and have a great product market fit. But it can as well be spent for the wrong things. So the financing round as such doesn't really mean anything. And there is this very concrete risk for some startups as well to be overfunded. So to get lazy when it comes to product market fit. Because you just have so much money that you can spend on marketing, so that you never really need to like ask for your product market fit and think about it twice. And I think this is really dangerous.
So I mean, tapping into your experience there, would you then kind of like argue that in times where you were kind of like cash constrained, you were more innovative or so, or more like resourceful?
I absolutely think you're more efficient, and you're maybe as well more innovative, and you are more under pressure to really be super efficient as a whole organization, and as well in your marketing strategies. Yeah.
So I mean, it's definitely your observation. I also have that if the moment you get into let's say trouble, you start to think about how what you can do and how you can actually survive without having to raise more money, right? So you have to become creative in a way. It's at least the kind of observation I made also over the years with different companies.
Right. Okay, let's move on to the third statement, and thanks for chiming in. And I think this is going to be a bit of a painful one, but okay. I would argue that basically as a VC, I would argue that we typically think quite highly of ourselves, right? And I think for those who are watching and who are familiar with like the Twitter handle VC brags, I mean, we have basically the scar tissue to prove it. So the third statement is more about the value that early stage entrepreneurs can kind of get from a VC. So here it goes. Beyond bringing money to the table, there is not that much value that VCs contribute to the success of your company. And again, 3, 2, 1, go.
Of course. This is a sting in my heart here.
Knowing that Mathias, you actually invested in the company from Anna, it's probably very Let's start with Anna first. Love to hear your perspective.
Okay, so since this is a session and we agreed on being brutally honest with each other, I'm sharing my brutally honest opinion here. And I absolutely think the main contributor from investors is money. It's money. And then a long time, there's nothing. And then we might talk about some other things. I think the trick is you shouldn't tell your investors that you think like this. No, but I'm kidding. So I absolutely see it like this. It is money. Oftentimes investors, when they look at your company, they only do have these spreadsheet view. So they see your company from a spreadsheet, basically. They see your reporting, they see your results, and so on and so forth. So they are very far away from this daily battlefield that you as a founder are in, and this daily battle that you are fighting there, and very far away as well from the product, let's say. So I do see a value there, having that said, from investors in terms of benchmarking you as a company, saying like when it comes to your order economics, when it comes to your marketing efficiency, and so on and so forth, and giving you more insights how it is for others. This is value. But then when we talk about like product ideas, especially product ideas in board meetings, I think then it's always really difficult to have like some product brainstorming.
You should change the color of that button.
Yeah. Exactly.
Mathias, you already had like a different perspective, right? So maybe you want to chime in.
Of course, I have to, right? It's our job. And also some people are here obviously commenting that we always disagree, but I think also there's it's the best way to learn when you disagree, right? And make kind of showing the different views, I think hopefully helps. I think money is a commodity by design, right? That's what money is. So and that's what we are giving to people. So why is my money, our money, better than the money from any other investor? So I think every investor is trying to show that they can add value beyond just the money, because otherwise, what are we? Who are we? And what are we doing? So I don't think every euro or every dollar looks the same. And especially, and what I'm alluding to here is like building a reputation over the years, and also building a reputation in providing a certain signal also to other investors, to the market, when and where you are investing. And if you look at companies like Sequoia, obviously they have built an amazing reputation over the years and are kind of a little bit like kingmakers themselves, and whatever they touch is considered to be something that is at least investment worthy and worth a closer look. That's obviously a reputation that you want to build and want to have as an investor, and what you are striving for, and where a euro from Sequoia is not the same, or a dollar is not the same dollar from another VC, right? And I also see that we have portfolio companies that we work with super closely, where we help them actually hire key talent, C-level talent into the company, and that's immediately leads to a better business outcome, and has an immediate impact. So we can't claim that for every company, but I think it's what we try to do, obviously.
I mean, I see your argument, and that's probably true when you look at then the next round and the next round. So the signaling of the one round is then it makes a difference when it comes then to the next round. So, but then probably this in like combination with is around at least at all a success factor for our business, or are there actually other KPIs? I would say like money, and just the concrete money, and then what you make out of this is the main contribution.
Of course. And then, I mean, at the end of the day, we wouldn't be doing what we are doing, investing in marketplaces, investing in network effects, if we wouldn't think that we kind of have something to offer there, or something that we can bring to the table and have a certain expertise. So that's obviously a big portion also of our thesis at Speedinvest X and then Speedinvest in general.
Right. Maybe one final question on this topic for Anna. So basically, if you make your decision on what investor you would get on board, what is sort of like the main criteria then for you? If basically you don't add that much value to the success to your business?
So the main criteria is really to get from other founders how these investors acted in the hard times of the business. So as long as it's good times and as long as everything is going well, right? I mean, everyone is happy, but the question is how this investor on the table acts when not everything is going well. And this is then the best thing that, or the best way you can get this information is to do reference calls with other founders where the investor already invested, and maybe especially with the companies that didn't went well, because there have been hard discussions in the board, there have been hard board meetings, there have been these hard conversations, and this is for me the most important factor when I'm choosing an investor to work with.
So without basically calling names, I'm also looking at the question that basically Fran posted in the chat, but I mean, what are like super tough times that you then kind of like see from what investors are kind of like trying to impose on the company that you run?
Sorry, what
like how tough is tough? What's the sort of shit that you get when you have to work with investors in kind of like a down season?
I mean, so I think this is a very wide range, like from stories from other founders that I hear there, and I think it's really it is from not pursuing anything more like on the financing round, not investing more, but as well versus, I don't know, kicking out the founder, which could be okay in certain cases, but really acting as like assholes there and not business forward anymore.
Right. Let's make sure we have like an American audience. They're a bit sensitive for these words. Thanks for that one. Maybe an interesting one to talk about is, which is also kind of like a topic quite heavily discussed, I would say, at least within VC, is kind of like whether you need to have scar tissue from being a founder before you want to become a successful investor. So basically, my statement would be, do former founders make for better investors? And again, we do it again. 3, 2, 1, go.
I think Anna froze, but I have the benefit of being
I'm
first.
there.
Yeah. So Anna can actually, maybe you wanna give it a go first.
Yeah. So I do think that it's true that former founders make better investors because they just have been like walking through the mud themselves and through all the ups and downs of entrepreneurial and founder life. So I do think it is especially an advantage in the pitching process, because the questions I get from investors who have been founders themselves in the past were most of the time much better. So while a non-founder investor oftentimes asks for like the spreadsheet view, like your numbers, your business model, and so on and so forth, I found founder investors asking much more questions around culture of the company, how your company culture is, around team functions, around HR, a lot around talent and HR in general. So I do think in the like pitching process, it can be a real advantage when you're pitching to founders. I think a little bit down the road, then it doesn't make that much of a difference anymore.
Yeah. Maybe just quickly, also in the interest of time, but from my side, why a no? I think there's some great examples of amazing investors out there that have no prior founding experience and turned out to be great investors, such as Bill Gurley from Benchmark, Michael Moritz from Sequoia, Fred Wilson from Union Square. And it's funny because I think they give similar advice to other founders or people that want to break into VC and basically say, hey, you have to work in a startup before or be a founder and then turn into a VC, but they never were a founder themselves. And same for me, right? So I think it might also, it's super helpful to put yourself in the shoes of a founder. On the other side, it might also blur your picture of actually maybe being too emotional, being too much emotionally invested into an idea. and not being able to make financially sensible decisions and so on. So I think it's always a fine line. But I think what we try to do at Speedinvest is just have a good balance of both, right?
Yeah.
Always have a good balance of people with a kind of investment or investor background and people that actually have entrepreneurial experience and entrepreneurial background.
Yeah, I mean, I have to smile a little bit here because obviously Matthias is on the side where he didn't have founding experience, right? So I think it's very easy for you to argue like this. I mean, I've actually had like a background as an entrepreneur myself, but I also see actually the benefit of not being a founder yourself, which is the benefit of having a blank spot. And it's basically also what you mentioned, Anna, is that when you haven't been into a company, you don't see all the different complexities that are actually there. But I think as an investor that doesn't have that experience, it actually allows you to take on like this bird eye view and then make something that is actually in reality very complex, but you make it very simple because you're simply not fully aware of all the depth that is underneath. So I think it's probably true to both of them a little bit.
Yeah. Should we allow for maybe 1 or 2 questions from the audience, given the time?
Yeah, let's do it. Let's do it.
I think so. We had, for example, one vision versus traction. There was one. How much caution are investors taking at the moment around seed investment, considering the uncertainty around COVID? I can only talk for ourselves on this one. Maybe taking it up. I think we have been we continue to be active. We closed the deal 2 days ago. We closed actually the deal with Planetly at the beginning, I would say, of this whole situation. I think it was 2 months ago or something when we closed. So that was initiated before and then closed during the crisis, but we also did a deal. So I think it depends, as always. People are more cautious, probably investing slower, but depends on the individual investor. I know it's not a satisfying answer, but that's how it is. There's one for you, Anna.
There's a question. Yeah, I see this and I want to take this. Anna, what do you think about bullshitting from VC side? I mean, thinking about this, it is first like great, and I think this is something that as a founder you should very much like as well emphasize that this is a balanced relationship. So the investor is very much pitching to you as well as a founder to be the best and the investor of choice, because everyone knows these days there's a lot of money in the market and everyone wants to get into the best deals. So it is not there's this one like investor has all the money and then I go there completely pitching. I'm as a poor founder. So I think it's much more developed into that, and this is very healthy, I guess, to a much more eye-on-eye relationship. So I've been seeing investors bringing us chocolate from a business trip. I've seen investors bringing us a term sheet together with a cake. I like that.
Wasn't me.
So, and I think that's good, right? And then so you can ask the investor as well. It's not only the investor who should ask you questions. So ask the investor as well. So how do you act in the hard times? What are the examples? Which companies should I call for a reference? Which maybe shouldn't I call for a reference and then call these and so on and so forth, right? So it's like in every situation, in every pitching situation, you then need to distract like where is the real information and what is the marketing part of it. Yeah.
I think maybe on this one just quickly, I think every VC has their portfolio on their website, or most of them at least. So you just take those logos and you just call up or connect to the founders over LinkedIn, etc., and you just ask them, right? I think that's
and I would always give a super honest view to another founder who's asking me on a reference on an investor.
Yeah,
very good. Thanks so much. I think we're actually kind of like running over time. I think if people have like other questions for either like Matthias or Anna or for myself, I think you can always try to reach out to us via the chat. Hopefully we'll have networking working a little bit later today as well, and there will be plenty of, I think, Speedinvest people to actually give you some input on some of the questions that have not been answered. I'm sure Mathias will give you feedback to your pitch deck. So thanks again for joining, and I hope you also enjoy the other sessions of today.
Yeah, thanks for tuning in, guys.
Thank you. That was really fun.
Yeah, it was fun.
I hope, yeah.
Yes, it was fun.
Okay. Yes, it was fun. Yeah, we agree.
Bye.
Bye-bye.
Bye.